The main purpose of MFRS8 is to help user of financial statement understand a company better, what the company actually does and how each part of the business perform. Next, this standard applies mainly to companies that have publicly traded shares or debt. It's used for both separate and consolidated financial statement. Under MFRS8, an operating segment is basically a part of the business that is regularly reviewed by the Chief Operating Decision Maker or CODM. This could be the CEO or the leadership team. For the segment to qualify, there must be separated financial information available for it. Then we have a reportable segment. Not every operating segment needs to be reported, only those that meet certain thresholds like contributing 10% or more of the company's revenue, profit or loss, or asset. Also, all the reported segments together must cover at least 75% or total external revenue. Company must also provide key disclosure, such as general information about each segment. The segment profit or loss, its asset and liabilities, and the reconciliation to the company overall financial number. When it comes to measurement, the segment information is reported based on what the CODM actually does internally. That means it might not always follow the exact amount of account treatment as a full financial statement. Even if something isn't shown in the segment report, the company still need to disclose some entity-wide information like detail on product and services, geographical area, and major customer. Next, I will explain the role of the Chief Operating Decision Maker or CODM under MFRS8. First, the CODM is not a job title, but a function. This function is responsible for two main things, which is deciding how resources are allocated to each operating segment, and number two, assessing how well each segment is performing. To do this, the CODM looks at internal reports that show the financial result and operation of each segment. In many companies, the CODM is usually the CEO or COO, but it can also be committee or a senior executive, as long as they are one who making the key decision about the business segment. For publicly listed companies in Malaysia, following MFRS 8 is mandatory. This means they must report segment information based on what the CODM actually reviews internally, not a separate set of numbers preparing just for reporting.
Now, I will explain about the type of segmental reporting, which there are two of them. The first one is business segment and the second one is geographical segment. I will explain a little bit about the first segment, which is business segment. A business segment refers to a component of an entity engaged in providing particular product or service or a group of related product or service that is subject to risk and return different to other business. It also has separate strategies and management. This segmentation can help the stakeholders, like investors, to see which part of the business is performing well or underperforming. Now, let's take a look at the example of financial performance. I choose YTL Corporation Berhad as an example of business segment. There are 6 segments for this corporation. First one is utilities, cement and buildings, construction, property investment and development, hotel operation, and lastly, management service. Among this segment, utilities was the top revenue contributor in 2025, generating 20,088,000 ringgit. Surprisingly, the property investment and development hold the lowest revenue, which only 595,000. Reporting like this is crucial as it provides insight how each line of business performs that can help the stakeholder track financial health in product and service, and identify the strength and weakness in order to help in making decisions. Next, for the second type of segment reporting is geographical segment. A geographical segment is part of the company that operates in a specific area because of different regions often have different economic environment, risk and growth potential. In other words, it is based on where the company operates or where the customers are located. Each region faces different market conditions, currencies, and political environment. So in result, the performance needs to be reported separately. Let's see at the consolidated segment by the Apple company. It was spread into 5 geographical areas, that is America, Europe, China, Japan, and the rest of Asia Pacific. Each region played a different role in contributing to a group total sales. We can see in this statement that America is the leading in contributing the highest sale, which is 50,430 in December 2023. This breakdown demonstrates Apple's strategy diversification with significant revenue in each region. There are 2 key benefits of segmented reporting. First one is it can help the investor to make a better decision. Segmented reporting helps users identify which part of the business contribute most to revenue and profit. It highlights performance differences among various business divisions or regions. Segmented reporting in YTL Corporation Berhad shows which division contribute most to revenue and profit. By viewing the performance of utilities, construction, and property segment separately, investors can make clearer and more informed decisions about the company's strengths. The second benefit is it helps in better assessment of risk and return. Users can evaluate how different segments are exposed to various risks, for example, economic, political, and currency. By reviewing YTL Corporation Berhad's segmented result, users can see how each segment faces different risks, whether economic, political, or currency related. This helps investors judge which segment offers higher stability or potential return.
We will move to the Part B, MFRS134 Interim Financial Reporting. First one, the financial report prepared for an interim period that's shorter than a dull financial year. This can be quarterly, bi-monthly, and also semi-annually. This standard also ensures a timely and reliable financial reporting. This is also improve the ability of investors, creditors, and other users. It also not just once a year. And by this way, it will help the financial market more efficient since the prices can reflect based on the latest information. Additionally, this standard generally requires the same accounting policies. It is also assessed materiality, which will be based on the interim period but not a full year. The most important thing is that the MFRS 134 stresses that the information must be on time and trustworthy. And for the next one is the minimum content of the interim report. It should consist of the condensed statement of financial position, comprehensive income statement, changes in equity, cash flows, and lastly, some selected explanatory notes. These are 2 significant events or transactions under the MFRS 134. The first one, major acquisition or disposal of an asset. This happens when the company acquires or disposes an asset, which it is a major move for the company to do it. So for the acquisition, it will increase asset and liability significantly. Meanwhile, disposal will reduce the asset and liability either way. It will affect the financial performance, so MFRS 134 requires that these events need to be reported promptly and clearly in the interim report. Same goes for the next one, which is the issuance of new shares and bonds. Issuance of the shares, it will increase as asset and equity. Meanwhile, for the bonds, usually will result in a temporary decrease in earnings per share.
Next, for question 3, I selected KPJ Healthcare Berhad as the example. The table below presents the interim reporting periods for both the current and comparative interim financial statements as disclosed by KPJ Healthcare Berhad for the quarter ended 13 June 2035. The information is reported in a tabular format. For the statements of comprehensive income, the interim period covers 1 January to 13 June 2025 and the comparative period is 1 January to 13 June 2024. For the statements of financial position, it is prepared as at 13 June 2025 compared to 13 December 2024 from the previous financial year. Lastly, for the statements of changes of equity and cash flow, both are reported for 1 January to 13 June 2035 with comparison to 1 January to 13 June 2024. In conclusion, MFRS 134 ensures that interim reports provide a true and fair view of a company's financial situations throughout the year. It helps maintain transparency, accountability, and consistency in reporting. Through our example of KPJ Hospital, we can see how significant events like dividend payments and share issuance affect a company's financial performance and capital structure. That's all from us. Thank you.